right? So no one's going to cut spending. No one's raising taxes. So how are they going to pay for these deficits? Exactly the way Warren Buffett said they will, by creating inflation. So it's here to stay. It's going to go up. And that means gold is going ballistic. The gold price is on a launch pad right now, ready to go to the moon.
In today's video, Peter Schiff, founder, CEO and global strategist of Euro-Pacific Capital, gives a warning that the 2008 crisis was just the prelude to a larger sovereign debt crisis in the United States that may lead to a collapse of the US dollar.
First thing I want to talk about is what happened on Friday. Because when Friday opened up, gold was at about 2,040. Had a big rally on Wednesday and Thursday. It was a new high for the year for gold. In fact, it was up about 12% on the year, which is pretty good because we barely finished a quarter. And we had a 12% move up in gold. You know, a lot of people have been hiding out in treasuries this year because they thought they wanted to play it safe. You know, let me get a 4% yield on my U.S. treasuries. Well, the problem is the dollar is losing a lot more value than 4%. I mean, in terms of gold, it had lost 12% of its value. So that's triple, you know, that 4% yield. So you're not getting anywhere near enough yield to compensate you for what you're losing by hiding out in cash, which is why I tell people not to do that, because I think the losses are going to mount up. So gold was at a 52-week high on Thursday at the close. You know, gold stocks continuing to move up, but still a long way to go to get to, their highs. But then we got some economic news that came out on Friday that should have been bullish for gold, right? The news was, one, we got retail sales, and they were way below estimates. They were supposed to drop by 0.4, and they dropped by 1%. And again, remember, retail sales are not adjusted for inflation. So the actual volume of sales is down even more because we know prices are going up. And so if sales are down that in dollar terms, so then they're really down in volume terms. So that happened. And also we got some manufacturing numbers that were weaker than expected. And also, you know, capacity utilization jumped up to 79.8, which I think is a bad sign. That was a big spike. This is the highest it's been in a while. But the closer our factories get to capacity, and if we still have lower production, that shows you that we're running up against our own ability to produce. And so that means less supply, and that is an inflationary number. But the overall manufacturing production numbers were weak. Retail sales were weak. You would have thought, oh, that's bullish for gold, because that gets traders thinking about, the Fed can't hike as much, or they're going to cut more, or the economy is weaker. But instead of rallying on that news, gold tanked. In fact, it dropped, I think, $45 an ounce at its lows. It got back down below $2,000 an ounce. Now, it didn't close there. It rebounded a bit, down about $35 on the day. So it closed the day and the week above 2,000, about 2,005. Let me check out where it is now. It's down about $1. It's actually, no, now it's down $4, 2001. And as I've been saying, I think that anything below 2,000 now is the buy. I think this is the low end of this trading range. I just don't expect us to stay in this range very long. I mean, we're in it now, but I think we're going to break out and we're going to keep moving higher because the fundamental news, the technical news is just too bullish for gold. Now, one of the reasons that gold rallied earlier in the week, ironically, it had a big rally on Wednesday, the day after I did my last podcast, when we got these CPI numbers. And again, the reason gold rallied was because the CPI number came out weaker or cooler than expected. They were looking for a year-over-year increase in the CPI of 5.2%. And instead, it only rose by 5%, right? So not as much inflation as they thought. In fact, that was the lowest year-over-year gain since May of 2021. Now, that shows you how much inflation we've had, because you have to go all the way back to then to find a year that was less than 5%, right? So there's a lot of inflation here. But it was lower than they expected. But still, if you look at the core, I mean, the core was still up 0.4 in 1 month. That's still a big increase. Year over year, that's 5.6%. But even if you annualize the last month's core at 0.4, that annualizes to more than 5% annual inflation at the core, right? Which excludes food and energy. And so how anybody can look at these numbers and conclude that the Fed is anywhere near winning its inflation battle. Look how much the Fed has already raised rates, and that's all they've achieved. And again, I think that the numbers we're getting now are kind of the bottom. Because look at oil prices. I mean, oil got back above $83 a barrel during the week. Now, it didn't hold the 83 handle. I think it closed at $82 or $82.43. I'm looking at it now, is where it closed. And the U.S. dollar index, even though it rallied on Friday when gold sold off, on Thursday, we actually broke 101 on the dollar index. So that was a new low for this move. Now, we rallied back up and in the dollar index, but we're still below 102. I think we closed at 101.50, and I'm looking at it now. It's up to about 101.70 here this evening. But a very weak dollar and strong oil prices, to me, those are more forward-looking indicators. And the reason that the headline number has come down, and it's come down to 5%, which is still a big number when you're looking at supposedly a 2% target. But one of the reasons for that was that oil price had come down. Well, they're going up now. And clearly with all these production cuts and the weak dollar, those forward-looking indicators of inflation would tell you that inflation is going to be a lot stronger in the future. And so looking at these CPI numbers and thinking that it's going down doesn't make any sense. But what also doesn't make any sense is the fact that gold rallied again on the idea that there's not as much inflation as we thought, and so the Fed's not going to have to hike as much or they can cut sooner. Traders are right to be buying gold on the inflation news, but they're wrong in their thinking that inflation is going away. It's not going away. Inflation is going to get worse, but that's actually more bullish for gold than what they think, which is that inflation is going to go down. And the ironic part about it is, to the extent that the inflation numbers get better, and that means that the Fed can be easier with its monetary policy, or the markets believe that, that immediately sinks the dollar, causing commodity prices to rise. So the idea that inflation is coming down automatically means it's going up, because the perception that inflation is coming down leads to weakness of the dollar, which leads to strength in commodity prices, which will, be factored into the CPI. But that's the news that came out on Wednesday that caused gold to spike. It was up like $30, I think, on Wednesday, following that, that softer than expected inflation news, even though it's inflation that is really driving people into gold and that will drive people. In fact, I watched an interview on CNBC with Warren Buffett. And if you can read between the lines on what Warren Buffett was saying, because, he really is a coward in many senses, because he's afraid to speak the truth. I mean, he knows the truth. You could tell that he knows the truth. And I've talked about this for a long time, that if I was in a room with Warren Buffett and the two of us were there and there were no cameras and no reporters and we spoke off the record, we would hardly disagree on stuff. So we're very much in the same camp. I know that. He's just afraid to publicly come out and acknowledge that he's in that camp. He wants to still cheerlead for the United States, and he wants to be liked because he's so rich, and so he feels that he has to say certain things in order for the public not to resent him for his wealth. But he was talking about inflation, and he basically said, look, inflation's here to stay. He said, you got to buy stocks as a hedge. You got to buy Berkshire Hathaway. I mean, we're a hedge against inflation. And he said the reason that inflation is here to stay is because we're a democracy. He said that politicians want to get reelected, and so they want to promise free stuff. That's exactly what I'm saying. And how do they pay for the free stuff? They create inflation. This is exactly what Warren Buffett was saying. And so he said because he knows that politicians always want to get reelected, they're never going to stop inflation. because that contradicts their agenda of reelection. But the thing that really bothered me about the interview is that he won't call these politicians out on it. He won't reprimand them for putting their own political careers ahead of their country. I mean, supposedly, aren't they there to serve their country? Shouldn't their country come before their own career? I mean, that's what you would expect, that they would at least sacrifice a reelection. I mean, you have guys that go to war and they risk their lives in battle for the country. We're not asking a politician to risk his life. I mean, he's not dodging bullets if he votes to cut government spending. The only thing he risks is that he doesn't get reelected. Big deal, but they're not even willing to take that tiny risk. And Warren Buffett won't even call him out on it. But even what frustrated me more about the interview is, and the lady that was interviewing him, I forget, maybe it was Becky Quick, or I forget who it was on CNBC, but it was one of the female reporters. And I know he likes to talk to women reporters. And so normally that's who interviews him. But she asked him this question. Well, Warren Buffett, what would you do, right? If you were in charge, right? Because you're not running for office, right? What do you think they should do? And he wouldn't say. He didn't even have the guts to say what he would do. Now, I know he knows what to do. We got to cut government spending. We got to cut Social Security. We got to cut Medicare. But he's not going to say that because everybody will jump all over him. Oh, Warren Buffett, you want to cut Social Security? Well, you're so rich. What do you care about Social Security? But what about, the average guy? You just don't give a damn, right? So he's afraid. But if he's afraid to speak the truth about what needs to be done, he can't criticize politicians who won't speak the truth because he doesn't even have an election. What's his excuse? He's got no excuse, yet he can't even say what he knows that our elected leaders need to do. But the takeaway from this interview is that inflation is not going away. It is here to stay, and it is going to get worse. So all these numbers are just noise. All the people who are looking for some evidence that inflation is going away, they're wasting their time. It's not going away. The evidence will never reveal that. As long as we have these big budget deficits. And by the way, they reported during the week, they got the deficit for the first half of the fiscal year. And this is the official deficit that they admit. And it was $1.2 trillion in 6 months. That means you're looking at $2.2 trillion, assuming the next 6 months are the same as the first 6 months. They'll probably be worse. Even though you got some extra tax revenues coming in for income tax. And by the way, I think Monday, tomorrow was the deadline to file your tax returns. It would have been April 15th, but that fell on a Saturday. So I think it goes over to Monday. My dad used to call April 15th April Fool's Day, because he said that's when everybody filed a tax return, even though no law required them to do so. And technically, I think he was right, but it doesn't matter because we live in a country where we no longer have a rule of law. We're a nation of men, not laws, and the Constitution and even the Internal Revenue Code don't apply. So if you don't file, they could punish you. They could put you in jail. So, I recommend that everybody file and ignore my dad's advice. But I think I always got a kick out of it, thinking that he would say April 15th was April Fool's Day. But anyway, because the government usually gets a little bit more revenue, right, in April because they get people paying their taxes. But I still think that the second half of the fiscal year could end up with a bigger deficit than the first half because more of these low-yielding bonds are going to mature. And they're going to have to start paying higher interest on that debt. But the point is, these deficits are huge and getting bigger. And so that guarantees that inflation is here to stay and it's going to get higher. Because how are these deficits going to be financed? We're not going to get tax hikes on the middle class, even if they pass tax hikes on the rich, and they haven't even been able to do that. But even if they do that, it's barely going to raise any revenue. And in fact, it may backfire and lose revenue. They're not going to cut any spending. I mean, even the Republicans aren't willing to cut any spending. right? So no one's going to cut spending. No one's raising taxes. So how are they going to pay for these deficits? Exactly the way Warren Buffett said they will, by creating inflation. So it's here to stay. It's going to go up. And that means gold is going ballistic. The gold price is on a launch pad right now, ready to go to the moon. When it takes off, it's hard to say. But again, you just got to get on board this rocket in gold, silver, commodities. You got to get out of US dollars or paper, because inflation is going to eviscerate its purchasing power.